Hi guys, I wasn't able to continue the third type of adjusting entries. So yes, let's proceed. Okay, so depreciation. It is an accounting method used to allocate the cost of an tangible or physical asset over its useful life. So in here, we compute the used cost of assets through the useful life of assets. Daghan og method on computing the depreciation expense. But for now, we're going to discuss the straight line method. So the formula is annual depreciation equals asset cost minus salvage value divided by estimated useful life. So you have to minus the asset cost kanang pagpalit nimos asset to salvage value, which means after you use it for useful life, if naapay value imong asset og pwede pa masell, and you have to divide it how many years na nagamit sa tangible asset. So the adjusting entry is debit depreciation and credit is the accumulated depreciation. Okay, so we have here an example. On May 1, 2023, the company purchased a machine amounting to 680,000 pesos. So the machine has a useful life of 5 years and salvage value of 20,000. So the entry to record the depreciation on December 31, 2023 will be. So our solution here is the depreciation expense is equal to asset cost minus salvage value divided by estimated useful life. So you have to distribute that one. The asset cost is 680,000 minus 20,000 divided by 5 years, which is the total annual depreciation is 132,000. Since the annual depreciation is 1 year and the month it was used is only 8 months, so you have to divide it to 12 months. That is why the answer of accumulated depreciation is 88,000. Now we have to record the adjusting entry. So on December 31, we have to debit the depreciation expense, machine 8,000, and then credit the accumulation depreciation machine of 8,000. Okay, so let's analyze the transaction. So the cost of the machine is 680,000. After our computation, it is 88,000. So the less accumulation depreciation. So we have to minus 88,000 to 680,000. That is why the value of the machine is only 592,000. So the machine now will be represented in the financial position based on its book value, which is 592,000. Okay, so let's now proceed to bad debts. It is a portion of the accounts receivable which are considered uncollected. So, mao ni pautang sa company na nagi-consider na di na makollect. It could be because of bankruptcy or kanang gidaganan. There are two methods of bad debts. So, the first one is allowance method, which is the GAAP, Generally Accepted Account Principle. So, it is under allowance debit doubtful account, and you have to credit the allowance for doubtful account. So it will be recognized bad debt loss when the account is doubtful of collection. The second method is the direct write-off method from the BIR. It is under from the debit of bad debt expense, and then credit is the accounts receivable. So it is recognized bad debt loss only when the accounts are proven to be worthless or uncollectible. Okay, so let us proceed to correction of erroneous journal entry. So it could not be avoided sometimes that errors will occur in recording transactions. So how are these errors being corrected? For example, Henry's company booked the correcting journal entry. So this is the collection of the customer who paid invoice. Hermes debited cash and credited service revenue. It is wrong because service revenue is not the correct account. So the correct entry is to reverse debit service revenue and credit accounts receivable because the customer pay. Accrued interest on notes. Promissory notes is an unconditional promise in writing made by one person to another, signed by the maker, engaging to pay to order or to bearer. A sum certain in money, on demand, or at a fixed determinable future time. So there are two parties on a promissory note. First is the maker, is the one who signs and promises to pay at the specified amount in the instrument, which is the notes payable. Second is the payee. It is the one to whom the promise is given and to whom the specified amount in the instrument is payable to, which is the notes receivable. So that's all for adjusting entries. Thank you.